All right, so see if we get this going. Screen. And we're going to bring up the stock market here. All right. Because this, everyone's scared because the stock market's tanking at the moment. And Yahoo needs this is too laggy. It's not working. There it is. And so, the stock market's falling down and everybody's all upset over it and they're blaming Trump. Over the course of a year, it's down 4.28%. And of course, this is, I look at these ETFs that are, whole market ETFs. I look at those as just high yield savings accounts, right? Like, I don't even consider these really investment fund. I don't even consider it investing because you're not really picking companies and you're not actually juggling the rebalancing of companies. This is stuff for people who don't want to really be investors, right? And people will talk to you about investing as if it's difficult. And you can see here, these are like lazy portfolios that's recommended. You have David Swensen Yale Endowment, You have your stocks and bonds, and this is these are portfolios that people will, say are good to use. So we'll benchmark it with the SPY, and then you have VTI and bonds, right? But if you did an actual portfolio, right, like say you did NVIDIA, you did AMD, maybe you did Abercrombie and Fitch, maybe you did Texas Roadhouse, right? Texas Roadhouse. And let's see here. You did let's go with Apple. Okay. And let's say you wanted it to leverage. And these are things that people, they'll say you don't buy and hold, that you trade these, and they don't know what they're talking about. Right? They're just full of it. And then we'll use TQQ. That's another leverage, right? And then we'll use SOXL. That's another leverage fund. And then we need one more, and maybe we'll go with a stock. So let's go with a stock. Right. We'll pick the heat map. And we're going to go with, we'll throw in, we're going to do a coal. It's not even on here. We're going to throw in HCC, Warrior Met Coal. Because who invests in coal companies, right? So this is, you have 10%, 10%, 10%, 10%, 10%, 10%, 10%, 10%, 10%. And we'll use VTI. That'll be our cash reserve, right? That'll be our cash reserve. Most people, like this guy, he's just going to invest in, we'll see. We're in portfolio number 2. We're going to start with $1,000. You're going to rebalance annually. You're going to contribute $200 a month, right? $200 a month. And we'll see what happens. We're going to analyze the portfolio. It goes back to 2018 because Warrior Met Coal came out in May. So we're going to start in 2018. And we'll look at like how our portfolio performed. Right? So a stocks and bonds portfolio is 27. And see, this is what they're talking about. They want to save from your drawdown. You know, they want the maximum drawdown to be 8%. You know, well that costs you a lot because even if you just went with the SPY index, you had 33,000, and you know your drawdown's only 14%. But if you went with a traditional portfolio, even leverage, and you just bought all the time, you know, once a month, $200, you're gonna have these drawdowns. But these drawdowns are ways you can purchase the stocks for cheap. And I mean, you can see that. I mean, this, you know, like here's the big drawdown, right? You went from, you know, $92.3 thousand, and you just fell. You fell all the way down to 70.4 thousand. You know, I mean, you've lost more than those other portfolios even made. You know, but you're still up there. And, you know, it might fall even more, but it's going to shoot back up, you know. You can come back here and you can see that, you know, at some points it kind of tied, you know, and then it just rockets off, and then it comes back, you know, and it rockets off. And you can come down here and you can look at, you know, like how these performed, you know. And of course, NVIDIA is an outperformer, but I mean, you could have these other companies in here, like, you know, I mean, Warrior Met Coal did good. SOS, look, it did better than this 3x leverage, you know. TQQ did pretty good at 6.4 thousand. SPXL at 4.5. You know, Apple at 3. Look at this Abercrombie and Fitch, $7,000. I mean, who would have thought that, right? I mean, Abercrombie and Fitch just you know, gave you, you know, it beat TQQ in returns. You know, so this is the stuff that people don't understand. They ask these questions like, what should I buy? When should I buy? What you want to do is you just want to pick. You want to divvy it up. Now, here's the thing right here. This VTI, this is your cash reserve. So, like, whenever these stocks like AMD and TQQ and Warrior Met Coal or Abercrombie, whenever they take a dip, and this isn't showing how this is used because it's just holding this as 10% weight. Like, this is called a cash reserve right here. And essentially what this is used for is like, whenever you log into your portfolio or you see bad news, you know, in the stock market, maybe NVIDIA is down 20%. Well, you sell off, you know, you sell half of your VTI off and you buy more NVIDIA. You know, that's how it works. And then at the end of the year, you rebalance back to 10%. Okay? And the rebalancing is what allows you to buy. It refills your cash balance. If AMD doesn't perform well that year, it allows you to buy the dip because NVIDIA is not going to just consistently perform well, right? It's going to have years that it doesn't and years that it does. And so what that does is it allows you to buy these dips. Look at Texas Roadhouse. Very good, you know. I mean, that's what it does. And that's what people fail to realize about investing.